Let's see if we're live on YouTube. Yeah, we are. Okay. Are you able to go in and update the title of the YouTube and stuff? Yeah, let's turn mic and camera off. Well, we'll turn the mic off for now. Yeah, this is good, bro. This does the job. I have my teleprompter too. Hey mate, how's it going?
Hello, mate. How are you getting on?
Yeah, I'm good. Joms is here. Joms is the producer. So
This is good. Whatever this is good. Obviously, I'm not clued up on all this stuff, but
no, it's definitely really good. And we can get live on YouTube. And what happens is non-subscribers end up joining at points we're seeing. So the last one we did ended up it didn't say it live, but we had 800 something people end up tuning in the first like
Oh, right.
hour or two. Whereas in Discord, you get very few people. So
Yeah.
yeah, see, we're literally live on YouTube right now. Like, look at the screen right here,
Oh, cool.
and we're going to be like the recording is much higher quality, which is good. So yeah, when we publish it later, it's good. We also have a super casual chat, man. We'll dive in. Joms, I'll go to the bathroom quickly. But then, Joms, are we ready to go live? Everything sorted? Yeah, cool. What I'll do, give me like 2 minutes, Tom. Go to the bathroom, and I'll drop the link in the YouTube link
Yep.
in the
Cool.
Discord. Cool. 2 seconds.
Cool. Sounds good.
Hey, Joms, can you give the YouTube link and let's get Mush to post everywhere? Well, I'll try and pass it to him. I'll put on Discord. Can you get him to put like in other places? Yeah, I'm gonna call Mush, make him post now. Yo, Mush, you got to post on stories and on Twitter and Telegram. And Johns, quick question, Johns. We can cut it, right? So if me and Tom start just talking, welcoming people for the next like 5-10 minutes, the recording live can cut when we actually start talking macro. Perfect. Let's grab this YouTube link. Bitcoin fallen to 85. Damn.
84.
Crazy.
It's good though. It's getting close. Like it's nearly there.
Yeah. Interesting. I'm curious, have you been reading the chats? People are dying, aren't they?
Yeah, I know.
Yeah, give me 1 second. Let me get that link. John, you sent me the link on Telegram, right? Okay, cool. Cool. What you can do, Tom, is you can open up the YouTube app and you can see the stream start to fill out, which is quite good because then that's where you'll see the questions, not in Discord. People start asking.
So, what do I just type into
No, you're good.
YouTube?
Obviously, me and you on the laptop, but if you have your phone, just go onto YouTube and for your phone app, and you can see the chat there too.
Okay, cool.
Yeah, people are going to start to join now.
Do we see who joins in this or no? All through YouTube.
Hey, you know, it's funny. A lot of people join. They joined last time, and we got to see their real names. So,
oh, really? Interesting.
Yeah, because people just join their Google account, right? So, if you don't want people stalking your Google account, don't comment yourself in the chat. But yeah, it's funny.
I think people know my name mostly anyway.
Yeah, but they're not going to go on your Google account and see what videos you've been commenting on.
Oh, really? They can do all that? So I mean, I don't comment on YouTube and stuff like that, but I mean, I use YouTube all the time. I don't really like comment and stuff. I've got it. Okay, cool.
Yeah, it's cool. The quality is a bit blurry, like here, but it is higher quality when we actually go, like the recording and stuff. But it's good. It's a nice platform as well. Okay. Gomorrah. We'll let a few more people come in. Check X. Okay. Yeah, link is on YouTube. Link is on Discord. I'll drop it in the meme channel. I'll give it 2-3 more minutes. We're early. I think a lot of people are waiting for 4. How was your time in Dubai, man? Oh, how was your time in London? I mean, you were here for a little bit.
Oh, mate, I got very ill, like very ill. I've still sort of like got this cough. Like it's tiny. I cough once an hour now, but I was ill like strongly for probably 10 days. And then the cough has just stayed, even though it's like much less now, it just stayed with me for ages.
Yeah, it's the worst. It's the worst. I was sick, I think the 22nd, 23rd, literally for a full month. I was absolutely battered.
Yeah, it's hard. I think a few people were hit.
Yeah, people got obliterated. Sucks. It's the winter flu, though, isn't it? Everyone gets sick.
Yeah,
Did you get sick here or in Dubai?
No, in London. It's the temperature change, the cold. I don't know, just not. It's just even when you walk outside, it's just like bang, just like hits you again.
Yeah, terrible, man. Well, hey, look, I think it's starting to fill up. Joms, are we recording then? All good? Let's see. I think okay, perfect. All right, Tom, let's dive into it, man. Obviously, this stream, macro, X crypto, a lot going on. We had the Fed meeting, lots of updates. The market seems crazy. Give us a lowdown. You put the pulse out earlier today. You have to summarize the pulse. What went down yesterday, and what's the score right now?
So we had Fed meeting yesterday, and to be honest, there wasn't There wasn't much change, to be honest. We know that the inflation data is like remaining high in the sort of high, well, not remaining high, but it's still elevated in the high twos. But the labor market has actually shown signs of improvement, and Powell actually did note that he sees some upside to growth. Now, if he sees upside to growth, he even said that this should be supportive or positive for the labor market because if you see increased growth, you should see increased hiring, etc. So that sort of suggests even further that they don't need to move just yet. He believes the interest rate, is close to um, neutral or mildly restrictive. So essentially, I think he's done and dusted, Powell. I think he gets he's no longer the chair in mid-May. Whoever it's going to be, we don't know. But he's no longer the chair in mid-May. I think he's done it. His reign as Fed chair, so him running the Fed, that Fed has done its last rate cut. I think the next cut will come in June, but the market will, whatever new Fed chair gets in and gives a dovish tone, dovish response, gets interviewed, gives very sort of dovish responses to any questions that's asked. The market will start pricing that in. Okay, we're going to get a cut in June. Cool. There's like that cementing of that. The market will then start rallying, or will start pricing that in as that Fed chair is speaking. So just because the new Fed chair will get in, and their first meeting will be mid-June, doesn't necessarily mean that the market will go up from mid-June onwards. It's probably a month or two before when that new Fed chair starts guiding positively, dovishly, whatever. So I think the market is possibly going to lull for another month or two. You're probably saying, okay, say the nomination, I think, might get pushed out much more now for the new Fed chair. I think you're going to get this lull period for the next 1 to 2 months, February, March, and then maybe it's April, May where it starts getting better. But I think if Bitcoin comes down to a low enough level in February, March time, I think participants, for me, for instance, will look at that and think, okay, that's where we should be, April, May, June's kind of time. I want to be, pretty allocated by then. So I want to take advantage of any weakness in the next 1 to 2 months. So I think even if you do get this weakness in the next month, and we've been relatively spot on, the market's come down again. So I think we're now approaching those zones. We're 84s, maybe you're looking for an 81, 82, 83 bullish divergence, see if that holds, etc., for another pop back to like an 87, 88, see how that retests. But again, I think you want to be, I wouldn't view the more pessimism I see, the better, I think, because I think if you can view that pessimism as the opportunity that others are sort of not seeing, that's the alpha. If you then think, okay, beyond February, March, you're going to get a much more positive market because of renewed interest in cuts. You want to be positioned for that. So if you can buy into the pessimism that you might get in the next 1 to 2 months and get those lower prices, say you could get an average of a 78 or an 80k Bitcoin if you were to get any sharp wicks. For instance, I think, what was it, 22nd, 21st of November, the candle closed at sort of 85k, but went all the way into 80,000. So that was like a 7% move below. If you could fill some of those wicks, it's like a mid 75 or 77 or something like that, and get an average entry of a 78k for a move back up to 100, 110 as a minimum, it's a really good play. And that's Bitcoin alone. So think what a Sol could do, a hype, memes stuff could do. You could, I think that would be a similar setup to where I think we had SPX last year, the meme coin SPX. It was in March 2025. So it came right down in January 2025. I think down 87% by March 2025. I think we're in that. So I think then if you was to get that play off the bottom on a Bitcoin move from 78 to 100, 110, you'll get memes doing something similar. And I mean, SPX went and did new all-time highs. So why couldn't new memes and other meme plays, whatever, go and do similar things? And it's a really short time frame that what SPX did in that time frame. So I think if you can go out along the risk curve for that kind of move, I think that's the play. But the more pessimism from everyone else, the better, I'd say. For us, if we're looking at it opportunistically.
Yeah, absolutely. I see it the same way. We did in our macro outlook report. We said Q1 and Q2 is about positioning, and Q3 and 4, that's where you reap. The thing is, what is the best approach to positioning right now? Is it DCA? Is it buy the dip? I know everyone's different, but what's the play in getting accumulated? Because I guess you don't want to get there too early and you don't want to get in too late, right? How does one find that balance?
um, I think it depends heavily on who you are, what type of investor you are. Someone like me, because obviously I'm sitting here all day trying to work it out and figure it out, I can be much more take a much more active approach. Where others that might have be running a business or having a full time job alongside it should take a more passive approach. I would say I'll do the passive approach. It's probably more relevant. I would say the passive approach is when you see a big move down in prices and it gets into that value area again. And if you look at our market updates, we've been sort of giving on chain levels, technical levels that all match up to provide a lot of convergence between what's like a supportive area or good area, good value area to go and buy. If you can get anything with a 7 handle, it's pretty good. If you get something with a 6 handle, you throw absolutely everything in. I'm not sure we get it, but I think if you get the 7 handles, which I think we'll get the 7 handles, but I think you really do go for it. And I think you sort of allocate a percent of your money that you want to do on a day where you have a 7 handle Bitcoin. Look at Twitter and things like that. See, I would try to gauge how negative the sentiment is. If the sentiment is like diabolical and you see the price is down 4, 5, 6, 7, 8%, just go and pick some up with a zoomed out view of thinking, okay, new Fed chair mid May. The market probably priced it in a month or two before. Let's look to sell into that a month or two later. Worst case scenario. Hopefully, you get a new
Yeah.
bull run or something like that. But worst case scenario, let's look to say, okay, a couple months after May, talking June, July time, why could we not just even just think of it as a trade? Why could we not place that as a trade? So I think that would be the smart passive approach for that, and I think it's a great opportunity. And I think because of some of my updates of calling for downside, I think people have said I'm bearish or pessimistic, and they're now saying I'm like very bearish. I'm now anticipating that turn to
Mm,
start being more optimistic and more bullish. So the lower it goes, the sort of more pleased I'll be because of the opportunity on the upside.
yeah,
So
absolutely.
that's where I'm sort of sitting with it. But that's the passive approach I would suggest to people if they want to go down that route.
Yeah, absolutely. Well, in your market outlook, the macro section, you made very clear you were bullish for 2026. Obviously, in the weekly report, you have to be active. And as data comes in and change, you have to cover it. But I think sometimes
Yeah.
people miss the forest for the trees because they don't realize you're zooming in for a reason. But the longer
Well,
term
I
pieces you
provide 1 to 2 updates a week. So,
so
so it's catered to like a zoomed in view as well, and then I try to give a more zoomed out view in some of them also. So it's catered because of the frequency of the updates as well.
yeah, no, absolutely. You mentioned a lot of this kind of hinges on Powell's replacement and how dovish the next Fed chair comes in. Is there any chance that we get a hawkish guy coming next?
I think Trump is not going to pick someone hawkish. It's going to be the case that that person says one thing to Trump and then just does the opposite thing when he, she, whatever gets in. I mean, there's no women in the running, it seems, at the moment, but um, it seems to be that the person will be very dovish. There is room to do more cuts, especially if you start to see inflation come down later in the year, or further along the line in the next sort of 3, 4, 5, 6 months. There's room to go from 3.5% down to 3%, sort of minimum. Trump will be pressuring to go down to 2.5, I think. So there's I think there's a 50 basis points left to do, sort of definitely this year, and it's a case then of are they going to stick? The most bearish case would be if they just do 50 basis points, but I still think that should be pretty that's still pretty good. But I do think if you do get a Fed chair that is a like Trumpist or whatever, is on his side, they will gun for another one, maybe two interest rate cuts, which would be another 25, another 50 basis points. Um, I think the thing Trump's having difficulty with at this moment in time, he's obviously not going to pick someone that is hawkish. He's picking someone that is going to be dovish, or is at least telling him that he's going to be dovish or they're going to be dovish. The question will be, do they then just go against and just do their own thing once
Yeah,
they're in the job? So I think that's the main risk. But again, there is that 50 basis points of room to cut first. I don't see that being. I think maybe that's like got a 10% chance, a 5% chance of that sort of like hawkish, bearish case playing out. But I don't see that happening like, at
Yeah.
all.
Okay, that makes sense. So the 50 basis point cuts seems like a no-brainer, regardless
Two
of the
twenty fives. Yeah,
225. Yeah, 50
yeah,
over two cuts, and another 50 potentially. That's going to come down to almost how much this next Fed chair wants to appease Trump, and we are
yeah.
heading in to the
Or,
midterms.
or, or if it sets up, if you sort of see the labor market deteriorate
Yeah,
a bit more, or inflation come down really gradually, they can go and cut more aggressively. Especially, I think Trump is very fearful that he'll get impeached if he loses the midterms. So I think he'll be really gunning to get that going. But yeah, I think
yeah.
especially if the dynamic plays out, and I think with inflation coming down over this next 6 months, I do think it will like cruise into closest to 2%, that the Fed can go and do more if they want.
Yeah, it is really interesting. I think when we look back at Powell and we can discuss how good he was in the role, but it did seem that he was always trying to get it right, and he wasn't trying to play politics. And if he felt cutting rates was the right move, he did it. He didn't bend to Trump. If he felt like he shouldn't have cut, he didn't. And whether he was right or wrong, he was sincere. I'm not sure with who comes in next, if they would just appease Trump for the sake of appeasing him. So that's going to be interesting. Will they do their job
Yeah,
properly, or will they just come in and want the economy to do well? So they're just cutting, cutting, cutting. But I guess even independent of that, with any cut is going to be bullish for us, um, in
yeah,
in half of the year, right?
yeah. I think I'd be very surprised if someone came in, they got the job through Trump, and then immediately they just went, no, no cuts. They're going to deliver two, like, at least the market will the bond market will sort of tell it to do two over the course of this year. Ideally, you go and get, rather than, a cut in June and then a cut later, like much later in the year. Ideally, you go and get another um, period, I suppose, of consecutive cuts. That would be the most ideal outcome for markets. But the market is priced quite hawkishly at the moment. It's not priced for like, you know, a chunk of cuts. So I think if you was to then go and get that dovish new Fed chair that was to really guide toward, no, we're going to push in this direction, especially if it's someone like Waller, because with Christopher Waller, he can steer the board. Like Powell is quite good at steering the committee as a whole, where someone like Kevin Hassett probably wouldn't be able to steer the committee, which is probably why every time Kevin Hassett spoke, it's like the same as Stephen Moran dissenting now. Like no one really pays attention to it that much, even though some of his ideas, like some of his like thinking, is actually like, it's actually relatively decent in terms of the arguments he's putting forward. But Waller is the one that could really steer the board. I don't think he'll pick Kevin Walsh. Kevin Walsh is just being crap at policy. He's a renowned hawk, and he's just not got a good track record of getting policy right. So
Yeah.
like that just doesn't make sense to me. I think it's either going to be Rick Reeder or Waller. Um, Knowing Trump, who knows what can happen. But
Yeah.
yeah,
It was interesting. What's going on with him being investigated by DOJ? And is there a real
who
risk?
Powell?
Trump, no?
I don't know if is he still being investigated by the Department of Justice.
Was
I
it,
don't know.
is that closed down now? I was talking to Sid earlier today, and he said that was the case. And he said that, is it just noise that the Fed could lose its independence, or is it sincere? That was one of the things he fired my way. I'm not.
No, I don't think. I don't think the Fed will lose its independence in terms of. Powell has bits back at Trump quite a bit recently, and he's had like I would say really like overwhelming support of that from like different people. You have to remember, if you come out and support Powell, you're also sort of going against the president of America. So you and so the fact he's got quite a lot of support his way, I think is quite substantial. And Trump has now peeled back a little bit. Um, and Besson is the guy that sort of moves the market around a little bit more now. I don't know about Trump being. I think Trump will be. I don't know if Trump has anything ongoing with the Department of Justice. I thought that was somewhat wrapped up, but I think he'll be. They'll gun to impeach him if he loses the midterms, which is why I think he's like really pushing like he is.
Mm.
The one who's being investigated is or been subpoenaed is, so it's like a threatening to indict, is Powell, but apparently nothing has been done about it. It's just a threat, and Powell's golden basically. So
Yeah.
I don't see much actually coming of that. I think it's just a ploy for Trump to put. Remember, Trump is trying to put pressure on Powell, not just to cut rates, but to also give up his seat when he does step down. Just because he steps
Yeah.
down as chair does not mean he's still on the committee. He could still be a voting member. Um, he's wanting Powell to actually give it. So historically, the chair, when they step down, when they're no longer the chair, they actually step down altogether. They resign from the Fed. So if they were to resign, if Powell was to resign from the Fed, the same as historically what others have done, that would give Trump another seat to go and put someone else in again, to go and put another dove in to try and get these rates lower. So I think that's where the pressure is. The pressure is coming from a few different angles, but it's all being centered on Powell to get him out, get him gone, because that gives Trump more steer and more leeway. But in terms of the independence argument, if if um, Trump appoints Kevin Hassett, for instance, the bond market will just like this. He might not even pass through the Senate. The bond market might also just reject it and say like, they've already got a fiscal problem, so there's already like this term premium in bonds. Like investors are demanding um, an increased premium to buy the bonds because of the fiscal deficits, etc. So if you then have a Fed chair that you could question their like actual legitimacy or independence over that, there's going to be even more term premium in the bond market, and that's just not. So Trump is trying to get rates down, and if that was to happen, rates would go up. And to be honest with you, like Trump wants rates down, but the more he hammers the Fed to get rates down, the actual inverse effects it has, because it threatens independence, term premium goes up, yields go up, mortgage rates go up, and that's sort of the opposite of what he's trying to achieve. I mean, he's probably not for listening, but his best approach is just to shut up and just let Besant do the talking and get on with it, to be honest.
Yeah. Well, Eric Trump follows us, so maybe he can
Oh,
pass this message across to his dad from Tom Capsey himself. So we'll have
yeah,
to wait.
sorry.
One more question regarding the Fed, Powell, and rate cuts. Yesterday, we basically said, look, they're not doing rate cuts. That he's not doing it before he goes. Could anything happen? Could something break over the next month or two before May that makes them rethink the decision, or is nothing looks like it's lining up for that?
Um, I suppose if there was crash in the yen, like a significant devaluing in the yen, um, that might cause them to come in and stimulate the markets in some way, or provide a ton of liquidity to save the sort of the Japanese bond market. Um, I'm not sure there's like on the inflation side of it, that's gonna like just fall off a cliff, or the labor market is gonna fall off a cliff. So I don't think you know rates coming down quickly in the short term comes from either of those two options. I think it comes all scenarios. I think it comes more from something going wrong elsewhere in you know yen devaluing significantly,
Yeah.
threatening the Japanese bond market. The US have to step in because the Bank of Japan owns so many bonds, US bonds.
Yeah, no, that makes sense. The yen carry trade, I believe, from a couple of years ago, we saw Bitcoin get wrecked. I believe in the market went crazy. I'm pretty sure one of the memes of both of them that we were pushing at the time, they got absolutely obliterated.
Yeah,
What's,
everything.
yeah, what's the score with the yen right now? I believe on Monday, when we in our weekly setup, we spoke about how it's hit a critical level where the Bank of Japan typically steps in. What's happening with that? Maybe give us a bit of a breakdown. What's happening with the yen?
So it went to the 160 level. So I need to get the chart up and stuff. I don't even know what it's at right now, but so I'll get up in a second. So if it gets to the 160 level, so i.e. 160 yen to a dollar to $1, if it gets that level, the BOJ have stepped in uh, to defend their currency at that level before. And what's happening at this moment in time is the yen is just gradually devaluing or weakening against the US dollar because of their diabolical fiscal situation in Japan. So what happened was last Friday, the New York Fed rang up, I think they rang up like primary dealers to ask what the rate was on JPY USD, which is basically saying like, what's this at? We're thinking of intervening. Previously, the Bank of Japan have intervened and it's never come through the US side. So the Bank of Japan will sell down dollars to buy up yen to strengthen the yen. But obviously, the Bank of Japan only have so many dollars to go and sell. So they're now basically going to the New York Fed to ask for help, sell down your dollars, buy back yen to support the currency. And so let me get this chart here. So I believe that it's bounced considerably. I think it's now like 153 or something.
Okay.
Where are we at? Oh, 152. Okay. So yeah, you saw like a gradual moving up. So April 2025, it's gone from 140 to now 160. And obviously on last Friday, the New York Fed and the Bank of Japan, neither of them stepped in. So none of that was done. But there was the sort of signal from the US side that we might step in and help out. And then all of a sudden there's this huge re-rating.
Yeah.
So nothing has actually happened yet, but they will again, once this calms down again, you will see the yen devalue again because of their terrible fiscal dynamic. And then at some point there will have to be a step in, but it's something that we're monitoring, but something we don't think that's like affecting us again right now.
Yeah, no, that makes sense. What do you think the likelihood of them intervening actually is? So they put the feeler out a couple of days ago. How likely do you think that reality is?
In the short term, I don't know. It's hard to say. This year, I would say it's quite high. Like they will have to intervene because the fiscal situation, unless they just want the yen to keep devaluing and they're not fussed about it breaking below the 160 level or above the 160 level and going to like 170, 180. But I'd be very surprised if they let that happen and then didn't intervene. So I'd also be betting that they will intervene at some point. Definitely from the Japanese side, not sure about the US side, but potentially.
Yeah, that makes sense. I remember when it happened a couple of years ago, it caught a lot of people off guard. I know you
First
mentioned
time.
it. Yeah.
Yeah.
But I assume this time because look, we're talking about it now, right? A lot of even our members and people are aware of this thing. So I doubt it would have a massive effect. But separate to that, just on Japan before we move on, I believe they have an election, an important one coming up in Feb. Covered that.
Yeah, I think the Prime Minister called an election. Again, I'm not an expert on the dynamic over there, so I would need to do more homework on that essentially. But I believe so. The reason the yen then sold off again is because there's a chance that that she would win, and therefore the yen would devalue further. But she's called the election because she can win essentially. But again, that prime minister or whatever it is over there, they are associated with increasing fiscal deficits. So again, yen devaluing further. So I can't remember a name or even a like status or role. I just know the yen dynamic situation.
Yeah, no, that makes sense. Okay, cool. I want to move on and talk a little bit more specifically on Bitcoin. Obviously, we're down quite a lot from the 125 level. And we've spoken before about how we could see 70, 80K on the table. Obviously, we know we're going to bounce. We think this year we sit all-time highs again. When you talk about the 70, 80K level, do you look at this like an accumulation zone with, we're most likely going to bounce back up? Or do you think this is just a stop on the way and we could go lower to 60, 65?
I think it's possible that it can go lower. And I'm not sure we see like all-time highs in the next 6 months, but I don't see why you can't get a mid-70s average entry, mid-70s for a move back to 100, 110. And like that's Bitcoin. So again, what would a Sol do? What ETH maybe? I'd always move to Sol rather than ETH. Hype is sort of its own beast. Like honestly, like self-admittedly, I'm absolutely crap at trading hype. I'm very good at Sol and I'm very good at Bitcoin. But hype, I'm not as good at. But you'd have to imagine with the mechanics behind that would perform phenomenally as well. So again, it's hard to really say because there's there's a positive fiscal side. There's a good fiscal backdrop for the US that's supportive of markets. You've got the AI driving the market, AI companies driving the market higher with equities and stuff, even though they've been a bit stagnant recently. But you're still in like an uptrending market. It's crypto is lagging, so I think this 4 year cycle hangover, etc., etc. I think all you need to see is a big break up, reclaim 100 or something like that, and everyone go, Christ, this is now a liquidity macro cycle rather than a 4 year, mining halving
Yeah.
supply cycle, or whatever it is. So, but again, those guys are right up until this date because price has come down. But
Yeah.
until price goes up, or if price goes up, I think it's until price goes up, those guys are right for now. But again, it's up to us to like deliberate and try to
Yeah.
anticipate what's going to happen. I think the 4 year cycle mining halving thing is done. I think it's a
Hmm.
macro
Yeah.
liquidity asset.
I agree. I lean in your direction. I know most of the team agree with you. They think the same thing. And we did cover recently why we believe that's the case. There's different players in the game, right? We're seeing with the ETFs and stuff, these guys are not going to buy a random dip on a Wednesday. They've got a plan, they've got targets, they've got like quotas they have to hit. They're thinking big picture. So that changed the game for Bitcoin in particular. It's not just a normal speculative crypto token anymore, right? Even with Ethereum, with the ETFs, these things changed. However, what would be the invalidation for your view? What would you have to see, or I guess not see, for you to be like, you know what? 4 year cycle intact. At the moment, it feels self prophecy. People believe it's still there, so it's kind of playing out. What would you have to see to be like, you know what? We're off base. The 4 year cycle continues.
I think 4 year cycle is already finished. If you look at the like, and it's not even like dependent on price. I think it's dependent on the fact you see how many coins are mined each day, the value of those coins, and then you see the net inflows and the net outflows of like things like the ETFs, and they absolutely dwarf the mine supply. So the mine supply used to have a meaningful impact on price. It now just doesn't have a meaningful impact on price. I would need to get the exact numbers, but it's magnitudes. It's huge in terms of the level of inflows or outflows. Depending on the ETFs, but good inflows week of ETFs absolutely like dollar sizing in dwarfs the mining supply sold. So I think if you look at that and you say, if you look at that and you look at everything and you say to yourself, is this a dynamic that I should still be paying attention to? It's not. Like it doesn't factor into your thinking to say, oh, that is still important. The mine supply could really, drive price lower here if that consistently be sell. It's not a thing really.
Okay.
So I think already it's done, regardless of price. I think the main thing at the moment where there's like Bitcoin is discounted is because of the quantum threat. Again, I'm not like an expert on that area, but I just think does like huge capital park their money in Bitcoin now, whilst there is still this like quantum threat overhead. Um, I think the lower Bitcoin goes, the more attractive it becomes to take the punt on it again and sort of say, okay, let's now push the deal with the quantum thing at a later date. But I think investors like the big money will be looking at this and saying, okay, there's a quantum threat at the moment. So whatever I think the fair value of Bitcoin is, I should discount that by 20% or something like this. Okay, if it drives down to, if I think fair value is 100K, okay, 80K is fair value. So if we go 15% below fair value, call that 68, 69, 70, 71, something like this, you would then say, okay, I'll start like chipping in with some size, because if you then get a movement back up for Bitcoin that then brings the fair value up to 110, sorry, you've then got a meaningful uptick there as well. So I think it's all dependent on that kind of stuff. But I think big money will be
Yeah.
will be looking at that and playing it that way. And at 85, we're in middle
Yeah.
ground.
I hear you. So basically, you think it's already proven that the 4 year cycle is dead, and people
Yeah.
aren't zooming out enough, and they're too focused on price. But that's why they believe it's still there. Regarding the quantum threat, so we actually recently dropped a report on this under a market
Okay.
pulse, and we are in the space. We have expertise, and very, very quickly, The team put it down and just highlighted how ridiculous that narrative is. So for
Really?
me,
Okay.
I think these big players who are very, very smart, um, they would understand that themselves. They know this is overblown. I think a retailer, I can see why they'd be worried going on Twitter and seeing everyone talking about the quantum threat.
Yeah.
Anyone with a little bit of knowledge would realize that's something for 15, 20 years from now. It's not a thing today. So I don't think
Okay.
that's as big a factor as what you've discussed. I think everyone is waiting for macro certainty. That like that's the key here. I think the
Okay.
narrative stuff, maybe it's like intra-sector. Like people now are talking about privacy coins and how they expect as regulation increases, there's going to be a huge crackdown. So you will probably see a big pullback in privacy coins in no time, in my opinion. People talk about meme coin sector, right? And memes are dead and they're not going to come back. And oh my goodness, this meme pick that Cryptonary covered is down 90%. Me and you spoke about this topic, but I think when you go sector by sector, narrative by narrative, some of these things just don't hold up. For me, for example, with memes, I don't think there's any other vehicle in finance that can realistically deliver you a 10 to 50 or even 100x. So I think when people have money, they're going to speculate. I don't think there's an alternative. You might get some attention in the prediction market, but just because of the risk reward ratio, memes are going to be there. Then you always have the guys looking for the utility play, right? As soon as they got a bit of money, they got to be the smart guy. They got to be, middle to right side of the risk of the IQ curve in that sense. And that's where things like hyper perform. And yes, I think in no time it's going to take a couple of bullish interviews with some smart guys on the internet, maybe this one too, and the quantum threat will be resolved. Maybe we'll do a podcast on that and cover it specifically, but I think it's all macro. I think let the
Yeah.
uncertainty clear, let Powell's replacement come in. And yeah, I think we switch up, man. But yeah, no, that makes a lot of sense. I think as we continue into Bitcoin, let's go on chain with it a little bit. What's the score with ETFs right now? I believe we're still seeing outflows, and I think long term holders are still selling. So let's talk some on chain.
So the ETF flows last week were pretty oh like negative. There were sort of significant outflows. This week so far they've been pretty flat, like nothing, not inflows, nor outflows. It's very very small outflows. So like nothing. It's obviously worth watching, but nothing that's got such a huge drive price. Um, Long-term holders had stopped spending. They are now spending again, and it has like come down to the point where it shows that they're sort of significantly spending like they were in the low 100Ks where they were risking off. So I think maybe we've got to move back up into the 90s. They're risking off again. And I think you'll see that 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 risking off that they've done pare back considerably as we go into like low 80s, high 70s. And I think you actually might start to see some like accumulation again. I've seen some people on Twitter say that long-term holders are accumulating heavily and stuff. And to be honest, I have no I don't know what metrics they're looking at, but the ones I'm looking at and have looked at for quite many years really. They're not that supportive at this moment in time. But again, it's all down to price. Like price will get to a level where those guys, it's same as me, like sit here saying 89K is not that attractive. It's in between levels. If we get a puke out below, sweet, that will become attractive again. And I want to see some evidence of that in the metrics. Patient wise, look at the metrics, go, okay, am I being followed in, or am I following others in, etc. See those metrics turn, and then you think, sweet, okay, this looks good again, and you then think, okay, we'll ride this up another 10% or so, from 78, 82K to 88, 90K, and then again at 88, 90K, you reassess the metrics. So go, okay, are holders selling off here? Are they de-risking? And so I assess at each point rather than try to forecast, a year or 6 months, whatever down the line. Obviously, from a macro point, I'll try to plot it all out what I think can happen. But again, I'll be driven on the decisions of buying, selling, etc. on the metrics as well.
That makes sense completely. I'd like to move away a little bit from Bitcoin, but I still want to keep it connected. But for a long time, Bitcoin was considered digital gold, and we're seeing gold smash all-time highs every day, right? We're seeing
Yeah.
silver smash all-time highs every single day. Has Bitcoin, like Bitcoin and gold, clearly they've decoupled. Do you see this as a temporary thing, or do you see them reconvening at some point? Maybe you're right. Maybe I'm wrong. Maybe the quantum threat has made people believe like Bitcoin is not a safe haven asset for now. Maybe it's a narrative thing. Maybe it's a risk appetite thing. Even if Bitcoin has the properties of something like gold or silver, the dynamics at which it trades just isn't the same. So what's going on with Bitcoin and gold? Have they decoupled? Is this temporary? Is this a divorce? Or is this just a bit of a breakup?
So I sort of see. So the last couple of days, I've sort of seen this in like a few ways, but there's one good way as well. I think gold is doing its own thing, and that's because the Chinese are stimulating quite heavily. You're seeing Chinese people rather than the People's Bank of China that's doing the fiscal uh, stimulate, doing the fiscal aiding of the economy, etc. You're seeing people flock out of the currencies and stuff into gold. That's what's driving the gold price. I believe that's what's driving the gold price. So gold itself is different. That has decoupled slightly. Silver, copper, no, I don't think so. I think that's silver is one of those ones like I'm shorting, trying to short, trying to sort of build a position, go very small, and sort of suss it out every couple of days, every week, whatever, to work out the short. I just started shorting. Um, so I think that is different. The real positive I have taken away from it is I think it was either silver or gold yesterday or the day before had added in market cap basically a whole Bitcoin market
Yeah, I
cap.
believe it was
So
gold.
the
Yeah,
yeah, so
in one
you look
day.
at things like that and you think like, okay, cool, let that have its time in the sun for now. But Bitcoin is still young, and it's guys like us that are on it and would rather have our money in that than gold. I wouldn't, I look at the gold chart and think, oh, they'll probably come down at some point. I wouldn't feel that safe chucking a ton of my money into it, even though the fundamental backdrop behind it is very good, and the Bitcoin fundamental backdrop at this moment, is being challenged from quantum, blah blah blah, whatever else. But Bitcoin, again, maybe it's years to come or whatever, will have its like time in the sun where people like us grow up that are more in tune with this asset, and you've got to let the sounds terrible, but the older guys die off. Their kids inherit their money. They're going to go towards Bitcoin rather than a gold. So, and you think the asset is what 16, 17 years old, whatever it is. It's nothing, absolutely nothing. So maybe we are in a lull period for Bitcoin with the quantum thing. If that is a big thing, again, definitely I'm not an expert on that, so I need to read more into that and all that. And I'll start with our report. Um, but yeah, sorry, I've gone
No,
too
that
much of a
makes
tangent.
sense.
I've forgotten.
Look, there's a decoupling clearly. That was a factoid I was going to share. Bitcoin's whole market cap added to gold in a single day. When
Yeah,
people have tried to predict Bitcoin's price, they've always said, hey, one day, it'll hit the market cap of gold, right? Or it will capture like a certain percentage every single
10th to
year.
7th. Yeah,
And or look, the reality is it does what gold does, just better if you zoom out 100 years. The same way, people were probably very hesitant to new technologies 200 years ago, right? People probably thought the car was silly in the beginning and they wanted their horse. People don't like electric cars now. I do think eventually we'll see a tipping point. And it's like you said, it's when the younger guys start inheriting the money, where they're like, no, Bitcoin is just superior. And then now I do think capital will flow. And of course, you're right. Now it's a different benchmark, right? I remember when I was involved in Bitcoin, I think gold was like, when I first started, like 13, $14 trillion market cap. Then I remember doing a report on it, like $22 trillion market cap. Gold's at what, like 40? What's the gold market cap? 40 something trillion?
I'm not even sure what it is. I mean, like
Massive.
now,
It
God,
just raises my long-term targets for Bitcoin.
same.
So yeah, it's very interesting. It just completely opens up the door. A question. Um, Look, you can buy. Actually, I'd say two things. Did you see Hyperliquid pump like crazy a couple of days ago?
Yeah, of course.
Oh,
Obviously, I missed it. I don't know. Just I saw it was a perfect chart in terms of like the bullish divergence and stuff like this. And I don't know. I'm crap at trading hype. I've just never been good at trading hype.
Yeah.
If I think I can't remember who I said it to today. But I was saying to them that, if it comes back down to like a really attractive level, which it probably can do, I might just start kicking because I'm shit at trading it. So I'll try to use it as not a trade and try to just
Yeah.
allocate a tiny amount into it. Okay, it's down a lot today. I'll put a little bit in. Come back in a week or two so's time. Oh, okay, it's down a lot today. Put a little bit in, and then just with the view of like, okay, cool. I'll check back in year end and stuff like that.
Yeah.
Rather than use that as the trade.
Absolutely. Hey, for just a quick note between this, Project X, hype liquidity pool, 100% plus APY on the table, decent ranges, but you can check out the report there, Tom. Quick one.
Yeah,
So, why Hyperliquid ran like crazy is people are trading on it and they're trading metals, they're
same. Yeah,
trading traditional assets. So, as these rails are being built for crypto, and I think people need to know, yeah, sure, prices might be down, but the infrastructure is just absolutely exploding. And this sets us up for higher highs. But as people trade these assets in crypto, do you still think there's entry and per like any use in people spot buying like gold and silver derivatives on chain, or do you think they're topping? How much higher can we go before this bubble bursts and people are like, I'll rotate?
for gold can go higher.
Ooh,
Like
okay, gold can go
gold can go higher. Yeah, silver. I think again, silver also can go higher, but it's just I I don't know what to say. Again, I'm not an expert in the like fundamental like supply side dynamics behind silver and the like the silver bar situation, but I see some like the watch dealers and jewelers and all that on Instagram like flexing with bars of silver, and you just think like Christ, the top has got to be close in this thing, but um yeah, it's gold. Gold has a great fundamental backdrop. Still, it's probably got a bit overextended in the short term. But I think again, I'm not sure gold and silver rotation out of those assets flows into Bitcoin. I'm not sure that's the um, positive story for Bitcoin over the next 6 months. I don't see that as like being the narrative. Hopefully I am wrong, but I'm not sure that's going to be the narrative because we did have that period in 2025 where it could have made that move and it didn't really make that move. So I'm not sure that's going to happen. Um, I think Bitcoin's going to be driven by like more cuts and stuff like that. Really, I think that's where that's going to go.
Okay, well, that's gold and that's silver. What about the stock market? So people always looked at Bitcoin and bonds and gold being the opposite, right, of risk assets. Like those are like hedge assets, and Bitcoin in the stock market, and then crypto as a extension of the risk curve. They're risk assets. Why is the S&P smashing all-time highs every other day as well? I always thought S&P and gold moved a little differently, but
Yeah, no.
what's happening there?
But there's obviously just like phenomenal passive flows into the S&P, Nasdaq, etc. Like in the US. But the story is still good. You're still technically on a rate cutting cycle, even though there's a pause at the moment. That doesn't mean there's not. And Powell was asked yesterday or day before, whenever it was, yesterday. Powell was asked what he sees the next move as being. Does he see it as a hike? And he was like very non-committal the whole way through. And then they said, "Do you see the next move being a hike?" And he was like, no, that's no one's base case. But, really took it off the table. So you're still in a rate cutting cycle, but it's not something. You're just on a pause for now. But anyway, stocks will look at that and say the earnings is still pretty good. There's still a resilient consumer. You have the AI driven capex spending from the Mac sevens, etc. That's driving the market higher. So all of that is still sort of conducive to the indexes at least just grinding up. So I think that's where that bid is essentially coming from.
Okay, nice. Are you trading any of these indexes or individual stocks?
No, some individual stocks. So some stuff like I've been messing around with silver. What else have I been looking at? Mag 7 stuff like Amazon. I was looking at that. Microsoft was looking at that. Oh, that's down 11% today. Christ. I was looking at Nvidia coin. So the only one I was looking at was coin, which is down a little bit today because I just thought that might be a good. If you think Bitcoin's going to go up, maybe coin might be the one to hold for that. But again, my positions in that stuff is very small because if I were to take positions, and even though some of them I look at them, I think like, I'll leave it, and I'm not sure I would do it on chain because of the funding rates. So I think you are better off doing that stuff in a brokerage account. Um, but again, I've not really been messing around with it. If I think there's a risk on environment, I'd rather just go to Bitcoin, or I sit and wait, and you can short stuff. And I'm on the trading side, so I'm happy to sit and wait, just look at my dollar pot and try to, short stuff down, long stuff higher, and take that approach.
Yeah, that makes sense. I remember a couple of years ago when me and you first started to connect, I asked you if you would diversify out of crypto, and you looked at me like I was crazy. So yeah,
Yeah,
Bitcoin
probably a
Max.
mistake though. Some stuff has done very well, but again, it's not. Like, I've had success on the crypto side of stuff. Maybe as I get older, if I get more money and stuff, then I'll diversify a little. I'm starting to diversify a little bit more now, but I'm in the figuring out stage. So you're not betting with anything. If something went down like 30% or whatever, a stock that I was like holding, I wouldn't even really notice the difference in it because I just don't put anything substantial, or what's substantial for me in it. So I'm in that, like, especially this year, I'm looking at this year as like where I'm paying attention to it all a lot more on the stock side, individual stock side, and I'm starting to like plug it a little bit, but nothing with any like conviction or size or anything like that. More just treating it as a figuring out year.
Yeah, makes sense completely. I'm interested in dabbling in some stocks. We're launching Stocktonary 2026 Moon Mission. We
Yeah,
recently covered Circle, basically the company behind USDC, and we wrote a report on how we think it's a great hedge long term. So check that report out if you haven't already. But yeah, Tom, now I want to dive in to some practical questions. Like 100 people watching right now, and we'll get to their questions. I'm going to throw some quick questions at you and let me know what you think and just answer from your gut. Don't overthink it. So,
yeah.
the first one, someone comes to you and says, "Hey, I have 100K and I'm not exposed to crypto and I'm looking to deploy it over the next 3 months and get allocated because I read your 2026 report. How would you allocate that 100K?"
Um, I just cut it up into the sectors. So I'd go Bitcoin, some majors. You could go down the privacy route if you wanted to. I don't personally. I look at the privacy coins and think I'd rather like short that stuff if it does pump. But I would look at Bitcoin majors and then some of like the higher quality memes. But again, only allocate to that stuff what you're willing to like draw down on. Expect the drawdowns because you will. SPX is the best example. Early 2025 drew down 90% to then what was it 6 months later be it like you know smashing new all-time highs. So I think that's a prime example. And that sector has struggled now whilst Bitcoin has struggled. Like majors have it all struggles together, it all does well together. So if you think Bitcoin is going to recover March, April, May, it's going to like starts recover and go up, yeah, okay, don't just allocate fully to Bitcoin, rotate out the curve as well because you're going to get increased gains there. But again, the key thing is about getting the macro setup right and the general direction of Bitcoin. And if you're right on that, go further out the risk curve and you'll most likely get better returns.
Yeah, makes sense. For me, if I had 100K to put into the market, I would look to allocate maybe a third every month moving forward. I would, of course, get into Bitcoin. I think that's a no-brainer. I know you're a trader, so you time it pretty well. Your Bitcoin trades me phenomenal. Me, I'm not. Probably DCA into Bitcoin, some Ethereum, for some Solana too. I know you're not as bullish on Ethereum, but I think they got some really cool upgrades coming. And I think that's where these big funds are moving. And it's a leading L1 for a reason. I think Solana is great too. Hype is a good play. And I'm bullish on memes. I think there are a few that we've covered at Cryptonary that I think look great. So memes, absolutely. Privacy, similarly to you, I wouldn't look at privacy as a play. It's more, I look forward to seeing what happens. But privacy on Solana within Ethereum, not necessarily a token on its own, but there will be other narratives too. A big narrative to keep an eye on are stable coins, but you can't exactly win by buying
Yeah.
USDC. but you can, make a play on stocks like Circle. And I think it's just a great overall for the market, the innovation we're seeing. Now let's flip it. Let's say you're someone who's put 100K into the market and you're down bad because everything's down. Let's say they came
Yeah.
in and they saw our thesis from the barbell portfolio. Let's say they bought Bitcoin at 120, they bought Ethereum at nearly 5K, Solana at nearly 300, meme coins, near all-time highs, and they're sitting now on 100K. And let's say this person doesn't need to pull the money out. Let's say they have a job where they make a couple of grand a month and they're living within their means. Is there any point in de-risking now, or is it, hey, stay positioned, maybe preserve some capital on the side to deploy later on? Are there rotations to be made? For example, if, let's just say hype is undervalued compared to Solana right now, or vice versa. Is it a rotation game? What would you do if you're 100K? Some people feel stuck. Some people feel like, what do I do? I've got no dry powder to put into the market. I feel overexposed, but do you really want to be cashing out on a meme that's down 90%, especially when there's huge potential on the table? What's your take on that?
Well, and when majors are down considerably as well,
Yeah, exactly.
I think just look at all that stuff and say to yourself, I'd be looking at that and just be looking, look, if you're going to choose a time to cash out and capitulate on your bag, it should have been when Bitcoin was going into the 100K mark, and we called for the move from 90 to 95 to 98, got to 97, we wasn't sure about it. If you want to risk off, if it's just too much for you mentally or emotionally, whatever, those are the times to go and do it. If something is causing you huge emotional stress, just probably just sell whatever it is, be it Bitcoin, hype, whatever. If it is causing that amount of emotional stress, or take some size off. But I would then say, look, try to allocate into things that are, if something is down considerably, go into that and reallocate your money into that. So then look at something and say, if something is down considerably already, and you'd be looking, if you weren't in that emotional torment state that you may be in, where would you look to allocate, and at what prices would that be? Okay, well, if that coin, for instance, is at that price, it doesn't make sense then we sell it at that price, if that makes sense. But I look at something like Ethereum yesterday at 3,000, I thought, that looks like a sell. Ethereum at 3,000 looked more like a sell than Bitcoin did at 89,000 in my view. So, and like something like hype pumping yesterday to 34, having done phenomenally for 3-4 days, maybe that's something that you take off, reallocate elsewhere. Sol hasn't really moved, maybe reallocate there if you're just staying in majors, whatever, but play it that way. But I think the reallocation game can be quite emotionally draining and quite sort of tormenting. For some people, especially if you're a more passive person. So I think if you're a more passive person, you've just got to get your portfolio weightings correct in terms of saying, okay, if you're really, really, if you're if you're really conservative, just say, okay, every month I'm going to allocate whatever it is you want to allocate, or every quarter, whatever it is, I'm going to go 80% Bitcoin. And then you figure out what, if you can do 15% majors, 5% memes, if you're super conservative. If you're risk on, you might say, I'm going to skip the stuff in between the majors, and I'm going to go Bitcoin and then memes, and just go that way. And then you might say, okay, but I'm going to go 70% Bitcoin, 30% memes. So like you can make it up in those kind of variations. But it's so hard to say because it's dependent on the person, their risk appetite, the money they're putting in. Like, can they afford to take a drawdown? Can they not? Again, if you can't afford to take a drawdown, you should never be putting the money in. That's, be it Bitcoin, a house, anything, whatever. Just keep it safe. But yeah, I think that's sort of what I'd say to
Yeah,
that.
yeah, absolutely. And obviously, I'm not sure. We spoke about it, but about a week ago, we announced that we're launching a new service at Cryptonary, our inner circle. We're capping it at a certain number of seats because a lot of work for me and for you, and Abro and the whole team. We were basically looking to bring in a bunch of like high level, like investors and traders with a lot of capital, and try to get more one-to-one time with them. And it's been really interesting because I've been doing the interview process for applicants. There's a lot of heavyweights in the community that pass you by. I was talking to a guy a couple of days ago, and he's sitting on 8 million in the market and looking to deploy 2 million over the next 6 months. And it's very interesting because the guy said what you said. He denominates his portfolio in Sol. He's a big Sol
Oh,
guy. He had a lot
interesting.
of money. He
Okay.
had a lot of money in 2020, 2021 with Sol because of Cryptonary. And his whole thing is like, yeah, I used to denominate in Bitcoin, but now Sol, even harder to
Yeah.
outperform sometimes on the way up, and definitely harder to outperform on the way down. Um, so yeah, and he was talking about recently. He played the hype rotation that we spoke
Yeah.
about,
Nice.
and yeah, it's very very cool. Diving in, speaking to different people, getting their risk appetites, and it depends on what you can take. And we were talking in the community yesterday, and I'm not concerned at all about the market. Right? I'm excited we move sideways for a bit. But of course, I understand if someone's down bad, if you're down 100K and you've got nothing to deploy, um, either put your funds to work. We've spoken about airdrops. We've spoken about the lending market. We've spoken about concentrated liquidity. Put your money to work. Risk off a little bit if you need to. Rebalance. So maybe you're
Yeah.
now richer. You didn't have to sell your hype to become richer in other assets if you rotated out. When we were peaking. So yeah, definitely, I agree with you for the most part. I guess next fun question: is there anything you're watching this week or over the last couple of weeks that you haven't spoken about with people? Maybe you don't put it in your reports because you already cover a lot. Is there a metric you're keeping an eye on, but you don't think there's any point covering it because you'll go over people's heads? What's something you're looking at you maybe don't put publicly?
Oh, um, the war stuff with Iran, I've covered that like very briefly, but I don't. It's something that I'm watching in the background, but if it's not something that's looking like more prominent, you know, in the updates, I'm trying to cater to what's prominent and what is actually the driving factor of the market rather than something that's like stewing in the background. In terms of the metrics, I look at literally like everything, everything on chain through Glassnode, pay the subscriptions and stuff to go and make sure I have all the data for all of that. So I'm looking at everything, but the stuff does boil down to a few key metrics. And those are the ones that we cover. And I think we see a lot of people on Twitter like sort of show all these different metrics off and stuff. And I have all these. I see them, and they try to make out that these metrics, because no one else is covering, so it's like a bit of an engagement thing. But because no one else is covering those metrics, this is something that people aren't looking at, or no, we're looking at it. It's just not. It just doesn't have a great weighting on moving price. So, and again, it comes down to the ETF flows at the moment, long-term holds, whether they're selling or not selling. You can look at things like the open interest. If something is getting vulnerable with the funding rates, you can look at the Coinbase premium to work out how like aggressive a bid is on the US side. Um, and those are the key drivers we're looking at the moment. But mostly it's about applying that. I think it's about applying that stuff when prices at certain levels. So Bitcoin at 90K, what was it looking like? Well, the Coinbase premium was very negative, but it was closing. It was coming back towards neutral. Long-term holders had chilled out and spending, and you strong ETF flows. Okay, sweet. 90K, you could probably get a move up to 93 to 95 as a minimum. Maybe it extends to 95, 98. Let's see. And then you reassess as price goes up. Is it being sold into? Is it spot driven? Is it leverage driven? What is it? And it's about like assessing the underlying dynamics that are driving price higher or lower, and then assessing that does it, for instance, now price is breaking down to 84. Does it put in a new low? If it puts in a new low, is that bid heavily? Is it short driven? Was it spot selling driven? You can look at all that stuff to then work out what the mechanics of the move was, to work out how, like, was it an overextension? It's looking at everything. But yeah, that's obviously like why I'm sat here all day looking at that stuff. But I enjoy it, so that's the main thing.
Yeah, no, that's good, man. But this is really good. I would say anyone who's watching, there is a delay time. Start dropping your questions, especially macro related ones or on chain or technicals. Feel free to drop them in the chat. And I guess one of the last questions from me, if you had to go all in, and let's say me and you were to make a bet right now, 31st of December, 2026, what's Bitcoin trading at?
I don't know. I don't know. I think it goes two way. I think it can either go two ways. I think price can go lower in the short term, but I think you get like a great opportunity to buy for mid year, like late late Q2, late Q3, like somewhere in there to sell if you want to sell. And again, I'd reassess that at the time. It depends how gun ho Trump can go, how gun ho a new Fed chair can go, because Bitcoin could then be, you know, at new all-time highs, or breaching into that level if you was to get a nice concoction of all those things coming together. um if you get something go wrong with there's loads of things that can go wrong, but there's always loads of things that can go wrong, and that's the job of
Yeah.
a macro person, to look at it, to work out, okay, this is something that's boiling over in the background, this is going wrong, is it going to affect price? To be honest, I don't know. I would just look at all that stuff, um, and then assess at the time. If you ask me for a 1 month call, I would say price is lower. If you ask me for a 5 month call, I would say price is a lot higher from that that low in a month's time, or 3 weeks, 6 weeks time, something like that. Year end is too far away.
Okay, fair enough.
Sorry.
Makes sense sitting there. Um, do you think now let's move on to a bit of politics for some fun? I see some questions rolling in too. But is Trump going to lose the midterms? Does he lose the House?
I think so.
Oh, what? How does that affect the market?
I think that's when you might get a bear market then. But again, I don't think Bitcoin does these bear. I was speaking to a friend the other day, and he was saying, well, this bull market has been very different to all the others. So why would the bear market not be different as well? And I think that's right. It's not a like blow off. Everyone's saying, oh, we get the blow off top. It's like the asset is like too big now. You're probably not going to get a blow off top. But it's again, I think these bear markets are bear periods. They're before the bear markets have been brutal, like really brutal. They've ended with blow ups, like companies blowing up or whatever have
Yeah.
triggered the bear market, have like catalyzed it, and then those bear markets have ended when a major player has blown up as well. So it's just been Armageddon the whole way through, and it's lasted like these 18-month blocks. I don't think we get anything close to 18 months anymore. I think a bear market now might go and be something like 9 months of downside price action. And I mean, look at this now. Bitcoin topped in October, so you have early October, 6th October, whatever it was. You had October, November, December, January. So you'd always say you're halfway through it. So if I think we can get another 1 or 2 months of like stickiness or downside, that'd be 6, 7 months. You're probably half there. So I mean, you're probably already there. So at that point in February, March time, for a move up by end of Q2, end of Q3. So the bearish period would then last 6, 7 months. I think that's about right.
Yeah, no, I agree. What do you make of what's going on with the Greenland situation, the Venezuela situation, the Iran situation? I know if you have to keep a very close eye on geopolitics for what
Yeah.
they're doing with macro. Is this noise? Is it serious? What's the score here?
I think the Iran one is not noise. I think the others are more noise, but still there's something going on. But I think the Iran situation is, I think Trump wants Iran overthrown, the regime overthrown. He's got what he calls a huge armada in the sea over there now. Um, it wouldn't surprise me if there was a strike this weekend, um, a US strike on Iran. The problem is the regime has really got its back against the wall at the moment. So if the US were to strike, I think Iran would retaliate at the like the strongest level that they could. So I think at the moment Trump is getting enough forces in and around the region to um, take or stomach that potential attack back. I think something could happen there. I don't think it's like 80% likely. I think it's like only 20, 30% likely. But and again, that would be fine for normal assets, but for crypto it'd be bad, because everything else is Trump will do that on a Friday night or a Saturday
Yeah,
night when the markets are closed, but Bitcoin market will be open. So that's something to like maybe hedge against or something for now. Um, but I don't know. It's a guessing game with Trump. It's a complete guessing game. People say he was very close to a strike before. I think it was last weekend or the weekend before, and he called it off last minute because they were frightened of the retaliation or the size of retaliation. Um, I don't know. Yeah, it's possible to say, but yeah, I'm looking at that stuff, of course.
yeah, no, for sure. I remember when I believe they bombed Iran last time, the nuclear sites. I
Yeah,
believe it was a weekend, and the meme coins were going crazy for a little bit, and
yeah.
then overnight, bang, everyone's memes got hit and people crap themselves, and by Monday everything was fine. With the
Yeah,
rest of
if you can buy those panic points, or like as the bombs are going down and it's being reported on Twitter, if you can buy those points, they're usually pretty good, like V reversal type stuff.
Yeah, no, it's interesting. Do you think, in the meantime, over the next 6 months, obviously we talked about going lower, it's quite likely. Do you think we see multiple relief rallies before then, where we perhaps touch close to 100K or 100K again, and maybe some of these altcoins, you know, like gaining another 40, 50%,
Yeah,
or sideways
I,
for a
I,
bit?
th- I Yeah, sorry. Yeah, I think so. Definitely. Like if you look back at 2022, that was like a bear market. But you look at the relief rallies; they're vicious, like really significant in terms of like percent gains and stuff like that. So you can make phenomenal returns in a bear market still with playing the relief rallies. And then when you get the relief rallies, um, long Bitcoin, short the alts, and you'd usually get a nice offset. So I
Mm,
think that's like a strategy for like short for
okay.
like trying to earn on the short side. But if you're going to short some alts, you need to short a basket of alts. So it needs to be, so the good one recently would have been privacy. But again, it's I think it's hard. You've got to do it as like a job and sit there all day and like it's a bit easier for someone like me, but I still find it very difficult. Um, and not because I'm like more intelligent than anyone else. That's not what I'm saying. That's not what I'm like saying. But it's more the case. I'm sat here every day and treating it as my job. That's all. But and again, I find it very difficult. But that's strategy. But the bear market rallies are vicious to the upside. They're usually great returns.
Yeah, no, I like that. That's a very clever strategy as well. I didn't think about that before. Shorting the L's. I've never shorted an asset in my life outside of setting up some delta neutral basis trades. So maybe we
Yeah.
need to sit down, Tom, and do a dedicated stream. Teach us how to trade. But yeah, no, this is very cool, man. Yeah, Tom, that touches most bases from me. I know a lot of people want to talk about a certain meme, but I'd prefer to keep that chat on Discord because this is YouTube. So we won't go there yet, but I'll be in the Discord shortly with everyone. Anything else you want to cover before we log off? This was a great chat.
I will end with one thing. I think I get tagged with the bear. He's too bearish or bearish like very often. Um, we were bullish, and then Bitcoin went to sort of the late 90s, and you think, okay, maybe this is a turning point again. And I was like getting bearish there, and I've been bearish down to 90, and below it now at 88, 89. Bitcoin is now at 84, 85. This is now not the time to get max bearish again. So like I think when people read my update a day or two ago, they were saying like, oh, it was not as bearish as I thought that would be. But you have to remember, as price comes down lower, you should be seeing you as
Yeah,
everyone else sees it phenomenally pessimistically. You should be trying to see that as the lower price comes, the more optimistic you should feel about the opportunity that's going to come on the other side of it. The
absolutely.
lower price comes down, the greater the percentage move back up in any form of bounce, relief rally, new bull trend, whatever it is. So I would say like try and look at stuff that way. With Bitcoin, if Bitcoin gets to 80, 82, I'm not going to be bearish. I'm going to be very opportunistic. If it can come down another 10%, perhaps it can come down another 10%. But you're looking at it with like gluttonous eyes to buy rather than
Absolutely.
sell.
Absolutely. And that's the game, man. It's so true. Look, we've found multiple like 100x meme coins over time. And whenever they pull back, people panic and people get upset. And I get it, especially if they're fully exposed, they're not sitting on capital, etc. But even recently, right, we saw a meme that was at this just over 20 cent. And our thesis was, oh, this thing could probably run to $1 if risk on remains. and even higher. And that's a 5x return from there. And
Yeah.
people are still excited. This thing pulls back 90%. And if your thesis sustains that $1 is still going to happen, your 5x opportunity just became a 50x opportunity. And you're still stressed or you're more upset. If you're holding nonsense, then absolutely you're going to crap your pants. But if you're in the Bitcoins, Ethereum, Solanas, and some of these top meme coins and some of these other plays, this is opportunity. There's no
Yeah.
more better opportunistic bet in the world than crypto, and even within there, within crypto, some of these altcoins and memes in particular. So I think people got to keep their minds open to opportunity.
And you should never be all in one single asset, even one sector. You should never be all in one. The only one I could even argue for, but even if you said majors, be all in majors. If you just picked, I'm going to be all in on ETH. It's just not a good bet. Spread it amongst amongst the like hype, ETH hype, salt, etc. So I think that stuff is key as well.
Yeah, it's so true. Even with Bitcoin, and now the
Yeah,
market we move together, we've seen that it doesn't matter how good it doesn't matter how good ETH is or Sol is. If Bitcoin gets smacked with something, it's going to affect the rest of the market. People get
yeah,
scared, they risk off. But we look. I've shared. I don't think the quantum threats anything to worry about anytime soon. But you never know, right? People often talk about, oh no, like the concentration with certain Bitcoin wallets, well, like you could see a massive sell-off. I don't think this is going to happen, but it'd be ignorant to not factor it in. Same thing with any asset. So you still should absolutely be diversified. And now is a great time to diversify because the market's down. You just rotate. Look, if you had no Solana last week and you had hype and hype just ran, hey, make the rotation. If you did not have exposure to select meme coins that you saw massive upside in, if the thesis remains and now it's down 90% in comparison to, let's say, a Solana or a hype, etc., make a rotation. So yeah, I think the rotation game is going to be very interesting and exciting. But yeah, Tom, thank you for that. That was great. Very thorough. I look forward. I enjoyed this one. I think it's smoother.
cool.
We try to get the slideshows on and stuff. It doesn't flow
Nah,
as
it's better
well.
to have the back and forth.
Yeah,
Yeah, yeah,
absolutely. I hope you like my questions today. Put some time
yeah.
in.
They're good, of course.
So, yeah, Tom, nice one. Appreciate it. And
Cool. See you later, mate.
later.